Hey everyone, Michelangelo here from Landing Real Estate. Today's topic and what the bleep is going on with mortgage rates. I've got Tim Lawson from Mac Home Mortgage. Tim, why don't you tell us about yourself?
Hey, thanks for having me today, Mike. My name's Tim Lawson with Mac Home Mortgage. Been in the mortgage business for 20 plus years at this point. Licensed here in Maine, New Hampshire, Mass, Florida, and Texas.
Wow.
So we can lend in quite a few places.
A lot of places.
It is, yes. So, but yeah, common question right now is what's going on with mortgage rates for sure. Although the Fed and the news will, talking nonstop about how rates are rising, mortgage rates are a little bit different. So although the rates that your car loan or a home equity loan might have that you're getting from your local bank, mortgage rates actually been trending down a little bit over the past couple of months. Still higher than where they've been, over the past couple of years. But over the past couple months, we were up in the mid sevens on a 30-year fixed. We're trending more down in the low to mid sixes right now, which is great. Obviously, that can change from situation to situation. Everyone's scenario is going to be a little bit different when it comes to the actual rate, but we're talking about that range for the most part, which is great. We're seeing that trend down. We expect that to continue as the year goes here too. So,
why all the doom and gloom from the news outlets then if rates have been coming down?
Well, it's a good question. I think ratings is a big piece of that,
right?
For sure. But also I think, it's kind of unique what's going on. Inflation is the main concern right now from the Fed standpoint, and that's why they're raising rates, because they're trying to get the inflation under control. So as the inflation, gets into check, we're going to continue to see those mortgage rates come down. Unfortunately, the way you get inflation down is by raising rates.
Right.
But that's more the Fed and the federal funds rate that they're raising, and technically that rate's the rate that the banks lend to each other overnight for, deposits they have on hand. So it's a little bit different than what you're seeing in our world.
So what you're saying is just because the Fed is raising rates, that's not automatically raising mortgage rates.
Correct, yeah. Even though the past couple months, the Fed's been continuing to raise rates,
right?
Mortgage rates have been coming down. And we expect that to continue. So into the rest of 2023, we expect the Fed to continue to raise rates.
Yep.
But we expect mortgage rates to continue to trend downward.
Wow, awesome. Tim, you mentioned some volatility stuff has been going on in the markets. What else is coming that could affect this?
Yeah, so next week, the inflation numbers that'll be coming out from the CPI indexes, those will be big factors in what goes on with rates.
Of course.
Just this past week, we've seen some volatility because some of the global inflation numbers came in a little lower than expected. So that was a good thing for rates. Some employment numbers came out later this week, so things went back a little bit the other way. So again,
kind of
volatility.
yo-yo.
Yes, exactly. Right. One day we see them up, next day we see them down. Sometimes even intraday.
Sure.
A lot happening there.
Okay. So where are rates currently?
So rates right now, for most people's scenarios, are in the low to mid sixes. On a 30-year fixed rate.
Yeah.
Every scenario is gonna be a little different for depending on credit, loan to value percentage, different factors.
Sure.
But yeah, generally in that range right now.
Okay. Now, historically speaking, is that super high?
No, historically speaking, that's actually a very good rate.
Right.
Compared to what rates have been at in the past couple of years, where rates were down in the 2s and the 3s.
Yeah.
Obviously, it's higher than that.
A little bit.
Yeah. So, we expect things to continue to trend back down. I don't know if we'll see the 2s again anytime soon or even the 3s, but we are hoping that, rates are getting, close to 5%.
Yeah, that'd
as
be
the
great.
year comes on. So that would actually, improve people's purchasing power quite a bit.
Of course.
So rate's a big factor. Yeah.
Now, something's happening next week that could affect rates, correct?
Yeah, so as I mentioned, inflation right now is one of the big driving factors on what's going on with mortgage rates. Next week, the consumer price index is coming out with a couple readings. So that has been a big market mover,
Sure.
End of 2022 and will continue into 2023.
So if they, sorry to cut you off, if the CPI comes in lower, do you expect lower rates?
Yeah, so basically, that's a reading of what inflation's doing. So if those inflation numbers come in lower, that's good for mortgage rates. So inflation numbers come in lower than expected, we would expect that to translate into some lower mortgage rates.
Gotcha. Now, what else can cause rates to fluctuate?
Yeah, good question. So right now, the labor market's a big piece of it too. One of the reasons, one of the fears of inflation being high is that, it's going to impact wages.
Right.
in employment numbers. So those numbers, sometimes this stuff can work like against each other a little bit.
Okay.
But yeah, jobless claims, wage growth, those types of things, and we've seen those numbers fluctuate a little bit this week. So we've had rates up one day, rates back down.
Right. Kind of a roller coaster.
Exactly. So there's been a ton of volatility for sure over the past year. I think everybody's heard that term volatility quite a bit.
Yes.
And we're hoping things are normalizing a little bit more.
Right.
But yeah, those CPI numbers next week will definitely be a big player in rates.
So I've got a lot of buyers kind of on the sidelines right now, wondering if it's a good time to buy. Should I wait? What do you think is going to happen this coming year?
Well, I think we'll continue to see rates trend down, which
Okay.
will be great for people's purchasing power. The lower
Right.
the rate, the lower their payment's going to be.
Yep.
Or the more house they can afford.
Right.
But I think what people need to keep in mind is that as that happens, as rates come down, a lot of those people that are on the sidelines right now, more of those are going to come out. So there's then going to be more competition too.
Right. It's kind of like a catch-22.
Exactly.
So all these people are still waiting for rates to come down to enter the market. And if that's the case, then we're kind of back where we were, multiple offers, not getting as much concessions from the sellers or none at all.
Correct.
What does that look like in terms of monthly payment? I think that's what's most important to any of the buyers that I work with. What's my expenses going to be per month? Can you touch on that?
Yeah, well, a good example, right? So say, if we're comparing like this moment in time versus say 6 months ago, right? Say there's a house that's listed for $450.
Okay.
Perhaps 6 months ago, you would have had to go 50 grand over asking.
Oh yeah,
So
easy.
you buy it for like 500 instead of the 450, right?
Right.
Whereas now, maybe that $450,000 house, say you could get it for 425. And every situation's a little different, but this is just an example, right? Rates were lower 6 months ago. So say we were talking about a 4.5% rate.
Okay.
And say we were talking a 6.5% rate today. So
Right.
same price, same list price, right?
Yeah.
450.
Same 450.
But 6 months ago,
You're paying
at a lower
500.
rate, you're paying 500. Today, say you can buy that for 425, and you're paying a 6.5 rate.
Right.
That payment's very similar. It's almost the same monthly payment.
What?
Yeah.
No way.
Yeah. So people have stuck in their head that the rate's like the most important piece of it.
Right.
But if you can get a house for a little bit cheaper right now, we know that rate's going to be temporary because rates will come down eventually. Is it 2 months? Is it 6 months? Is it 12 months? We're not exactly sure. There's no crystal ball, but we know they're going to come down. If someone can afford it now, can get in, can handle that monthly payment, they're going to be in a great spot to refinance down the road and bring that payment down. But they're avoiding as much all the competition.
Yes.
Currently, because there are so many people on the sideline.
Right. Not as much competition. You can get a home inspection. You might be able to get the seller to pay some closing costs.
Exactly.
It's a much more favorable time to buy despite the rates. Now, what did you say the payment difference was between the two?
It's virtually the same payment. I mean, taxes, insurance, that stuff's all going to be impacted a little bit too in the total monthly payment.
Yeah.
But from a principal and interest standpoint, it's within like $10 of each other.
Wow. You heard it here first, folks. Thank you for joining us on What the Bleep is Happening with Mortgage Rates. I'm Michelangelo Floridino, and this is Tim Lawson. Have a great day.
Thanks. Have a great day.